Mark Twain once said, buy a land, they are not making it anymore. Real estate is one of the oldest industries out there, and investing in real estate is probably one of the best investments you can ever make. But over the last few decades, house prices got out of control. 99% of the housing market right now is now unaffordable for most Americans. The median house price right now is around $430,000, which is 6 times the median salary. But that wasn't the case all the time. I mean, just go back 50 years ago. The median house price was just 3 times the median salary. Even if you factor in inflation and all other factors, houses just got out of control. They're extremely unaffordable. Today, you have to work double the amount of time that you had to work 50 years ago to get the exact same house. But when I was a kid and we used to watch sci-fi movies, future looked bright where we will delegate everything to the robots and we'll have the technology to solve all other problems. But fast forward to 2024, house prices are breaking new records. No wonder why we have so many millionaires coming out from the real estate. But why isn't the richest investor in the country isn't investing in real estate? Real estate is literally the largest market in the United States. But the smartest and the most successful investor in the United States, Warren Buffett, who has built a personal net worth of over $120 billion, is not investing in real estate. Is there something that he knows that the rest of us don't? Warren Buffett is a long-term investor. He doesn't really care where the business is going to be 6 months from now or a year from now. He always looks at the long-term prospects of the company. In fact, he once even said that if you're not ready to hold a stock for 10 years, you should not even hold it for 10 minutes. That's how far he looks into the future. That's why he always looks for simple and direct businesses where he can easily understand and predict its future. This is the product, these are the customers, and this is exactly why they buy this product. It's as simple as that. Behind every single stock, there is a real company with the real teams, real products, real services. And the better you understand the business behind the stock, the better you will understand where the stock price is going to be in the future. The second trait that Warren Buffett always looks in a business is, will the customers come back buying that product? And why? That is the most important thing, because you want to invest in businesses that have a consistent inflow of cash. These are the businesses that keep rising. You see, there are 2 types of products. The first product is where you spend a lot of money acquiring the customer, and once he buys that product, it's over. The second type of product is where you acquire the customer and then that customer keeps coming back. That's why if you look around, you will realize that most of the businesses over the last 10 or 15 years have shifted their business model to become a subscription business model. Take Coca-Cola, for example. It's one of the companies that Warren Buffett has invested hundreds of millions of dollars. In fact, he has made billions of dollars out of Coca-Cola. And even though it's like 2024, he still doesn't want to sell his shares of Coca-Cola. What does Coca-Cola sell? A soft drink. It's a simple product that we know why people buy that product. But the most important thing is that they sell a type of a soft drink that people keep coming back to buy that product. If you take a look at any Coca-Cola drinker, which I was back sometime when I was younger, you drink it all the time. It's not a product that you consume once a month. Once you get addicted, you keep drinking that cola probably like every single day. I have friends who drink Coca-Cola literally multiple times a day. The third trait that Warren Buffett always looks in a business is brand recognition. This is probably the most important factor. I mean, think of soft drinks. When you have a Coca-Cola fan and he goes to the store, out of 20 or 30 soft drinks that are out there, he instantly recognizes Coca-Cola and grabs it. That's how powerful the brand recognition is. People want to buy products from brands that they feel familiar, that they feel connected to. And that's why it's so important to pay attention at the third factor. Let's take another example. Back in 1980s, Warren Buffett invested $600 million in Gillette. Now, if you take a look at this company, it's in exact same position as Coca-Cola is in beverages. It sells razors. It's a simple product that solves a simple problem. Now, do you think that people keep coming back to buy razors to shave? Of course, because it solves a fundamental, simple problem. Now, if you go out there and ask people to name another razor brand other than Gillette, they probably won't be able to do that. One of the industries that Warren Buffett has avoided for years is the tech industry, even though he's a great friend of Bill Gates, who tried to convince him to invest in Microsoft back in 1990s and even invest in any other tech company, because Bill Gates knew the future. He could see how technology is going to shape our reality today. I mean, just take a look at your life. You depend on Google for your daily livelihood. You depend on Meta, on Instagram and Facebook for their services to keep connecting with your friends and family. But he always avoided it because he could not find these three traits in any of those companies until 2016, when he finally invested in his first tech company, which was Apple. Unlike most of the other tech companies out there, Apple has a very simple business model. Its primary product is the iPhone, and it somehow made it in such a way that people keep coming back every single year to buy the exact same iPhone that is slightly better. It have turned iPhone into a need and not just a want. It doesn't produce multiple phones a year. It's literally just the same iPhone every single year that is slightly modified. So it's a simple business model. They have products that people keep coming back to buy them. And most importantly, it has a strong brand recognition. Apple is probably the most powerful brand out there. It's more even powerful than probably like Coca-Cola or McDonald's. Now, let's compare that to real estate. Of course, real estate fulfills one of the basic needs, which is having a shelter. And people will keep coming back for it because they always need a roof over their head. However, real estate doesn't have the third most important trait, which is brand recognition. What matters in real estate is location. It doesn't really matter who is renting that apartment, who is selling that place. As long as it's located in a prime location, there will always be a demand for it, which makes it extremely difficult for people to compete there. Since Warren Buffett started investing in Apple in 2016, its stock price has risen by almost 700%. I'm not saying that you cannot make the exact same returns in real estate, but it's extremely difficult. I mean, to get a deal in real estate where you will make 700% in the same period of time is unimaginable. And real estate is not really as passive as a lot of people imagine. I mean, when you have one property, it's not really a big deal. It's like a side hustle, you know? Even when you have like 2 or 3 properties, it's still manageable to a certain extent. But you have many properties, then it turns into a full-time job. Something always breaks down. So if you're alone, then it's literally a full-time job. You probably need like a small company to manage all of those properties. Secondly, just because you have a property doesn't mean that it will always be rented out. Yes, there are periods of high demand, but there are also periods of low demand. And if you have a mortgage, which you probably have if you're investing in real estate, then the bank doesn't really care whether you are renting that apartment or not, whether you are renting that house or not. It doesn't really matter. You still have to make your mortgage payments. It doesn't mean that it's a bad business. It's just a business where you have to spend an equal amount of time. When Warren Buffett invests in any company, let's say Coca-Cola, he doesn't go out there and manages that company. He might be at the board of directors out there giving some business advice and influencing some of the decisions out there, but he doesn't manage these businesses. He doesn't even take any key positions in any of those businesses. His job is to find for companies that have strong fundamentals, strong teams, good products where customers keep coming back for them, and just throws his money out there and enjoys watching how his money keeps growing, how his money keeps making more money. And that's why it's important to learn the art of investing. I mean, even if you're living like paycheck to paycheck, it's normal because even Warren Buffett started with just as little as $100. It's one of the most important skills out there. It's a skill that will teach you how to double your money, triple your money. This is the only path to financial freedom. This is the skill that every other rich person out there learns. And that's why we launched the Intelligent Investing Academy, to teach you how these professionals are picking stocks. How are they making money in the stock market? So if you don't want to waste your 2024 and learn a skill that will actually be helpful throughout your life, then learn the art of investing. Now, the beautiful part about the stock market is that you can even invest in real estate through stock market. These companies are known as real estate investment funds, or REITs in short. And Warren Buffett is one of the people who invest in these companies because he knows that he still wants to take advantage out of the housing market. He was an investor in store capital. But in 2022, when the Fed raised the rates and he understood that the market is going to collapse, the real estate market is not going to grow as it did in 2020 and 2021, he immediately sold all of his investments in all of these rates. If he has invested in real estate directly, hundreds of millions of dollars, it will be extremely difficult for him to exit those positions. But with rates, he can do it with a glimpse of an eye. But he isn't entirely out of the real estate market because he has invested in D.R. Horton, which is America's largest builder. This company builds like single-family and multi-family rental properties. And as we have discussed in the previous video, Wall Street has an eye on the single-family houses. They want to own most of the real estate market by 2030, and Warren Buffett is prepared to take advantage out of that opportunity. To find a great investment, you have to look for businesses that are inaccurately priced in the market for one reason or another. It could be a business with strong foundation that isn't yet scaled yet, or a business that have developed a new technology that will revolutionize the industry sometime in the future. But most of the stocks lose their value, even if they're great businesses, when there is a crisis. Just take a look at what happened to Apple. Did Apple at this point lost like 25% of its sales? Did they lose like 25% of their employees or their products? No, absolutely not. That's why when the panic was over, all of these companies recovered and restored most of their value and even started growing further. And that's not the case with real estate. Real estate prices don't really fluctuate as much as stocks. I mean, they do fluctuate, but not that often. And if there is an opportunity in some area somewhere out there, probably the local real estate agent or realtor will actually take advantage out of it before you even find out that there was actually such an opportunity in that area. And the biggest problem is that we don't have a real estate exchange like we do with stock market, for example. When you take a look at the stock market, you see what is happening with the stocks live. And in order to be approved and to be listed in the stock market, you have to meet a certain requirements. There are some harsh requirements that every single company has to meet. And every single quarter, these companies are obligated to share their financial statements. So we know for a fact how these companies are doing. Yes, of course, they can manipulate the numbers in one way or another, but we don't have that much information about real estate. It's one thing to buy a house for yourself. Of course, if you're staying in one area for a long time, taking a 30-year mortgage and buying a house is probably the best decision out there. But if we're talking about investment terms, then stock market simply has much more opportunities. It's way easier, way faster to grow your wealth than the real estate. Of course, there are other perks that real estate offers that the stock market does not, but still, for Warren Buffett, the option, the choice is clear. It's the stock market. If you have enjoyed this video, make sure to give it a thumbs up. Thanks guys for watching, and I will see you in the next one.